Today we're going to be talking about a little bit of a add-on to yesterday. I want to talk about what you should be doing in January um, when you are self-employed, because when you're self-employed, your January looks very different from someone who works a W-2 job. And so we are in, like I said, episode 2 of 2026 Tax Talk, where I'm going to break down taxes for self-employed hair professionals and hair business owners. Um, let me I'm also going to utilize my board today. So I was talking to my sister this morning, and we were talking about this live from yesterday, and just talking about how when you have a business and you work in accounting, you know how crazy it is in January to close out a year. So you have to make sure that all of your income and your expenses are accounted for. You have to make sure that your projections are updated with your actuals. So if you had a business budget in 2025, you actually have to update that with actuals for 2026. We talked about how there's so much that you have to do, but new year, and most people want to focus on what they're going to do in the future. And so this is really meant to tell you exactly what you're supposed to focus on in 2026. And I wanted to go over that yesterday, but I think my nerves got ahead of me. So the first thing that I want you to do in 2026, before you get wrapped up in what to do, I want you to close out 2025. And the first thing you have to do is summarize all of your income and expenses. And if you are not someone who's working with an accounting firm during the year, this is even more important. So that means making sure that you gather your bank statements. If you have your booking apps or like your payment processors, you want to make sure that you are getting those reports, and also credit card statements, bank statements, your booking apps, anything that you've spent money on, any receipts that if you pay for anything with cash, you want to make sure that you have all of those things together. And then also you want to make sure that you don't just focus on the income. Like I talk to a lot of hair professionals, and when it's time for tax season, I asked them, oh, did you have accounting software during the year if they didn't work with an accounting firm? And they'll say something like, yeah, I had Square. Well, Square is not accounting software. Square is only tracking your income. Square has no idea about your expenses unless you're using like the Square banking card that they recently rolled out. But even that is not all of your expenses. And so you want to be careful with um, just making sure where you had all of your expenses so that you're gathering all of that information. And so when I say summarize your income and expenses, what I'm saying is put that in some type of a spreadsheet or some type of a document where it rolls up to a category. So for income, it's pretty simple. You can just have sales for services, and maybe you want to break it down if you sell products or merch, or maybe you also do some mentoring or coaching, then you want to have those as different line items. Not only does it help you for tax purposes, but it also helps you understand where the money came in from your business during the 2025. So that's really what I'm talking about when I say summarize your income and expenses. And the reason why this is so important is because if you're not summarizing this stuff on your own, and you're not digging into this stuff now, right? If you're not being intentional about it, when it comes time for taxes, then you're guessing, or you are trying to pull reports from different places, and you may miss some things, and then you'll get a nice letter from the IRS saying, hey, you forgot to tell us about X, Y, and Z. So that's why this is really important. And if you have any questions during this live, you can put them in the chat, and I will be looking at the chat and answering any questions that I'm able to. And I also believe Tara is in the room. And so Tar is one of the enroll agents here at Hair CEO, and she'll be able to answer some questions as well if you have them while I am chatting. Um, okay, so that's number one. Number two, the second thing is I touched on this a little bit, but you want to update your projections or your budget. This is something that's important because when you are starting 2026, a lot of you will have budgets, and budgets is not just what you want to spend your money on. A lot of people don't realize that, but your budget can also and should include how much revenue you are expecting. And so when you're talking about your revenue goals for 2026, you want to make sure that you have the actuals so that you can update. And I'm all about being positive. You know, if you want to make double what you made last year, that might be doable, but you want to be realistic. So to give you an example, had a client who I want to say they were right at around 75,000 for the year, but they only worked 3 days a week. And when we talked about 2026, this particular client wanted to drop a day, and their revenue goal for 2026 was $100,000. And I was just like, okay, well, let's take a look at this, because if year to date, and this was, a conversation we had in late December, so very close to the actuals. Breaking it down, like, okay, well, you want to work less. You're not raising your prices by that much. You are only offer services. So does it really make sense for you to have $100,000 revenue goal if you're working 1 day less than you did in 2025? And hearing that, you're like, oh yeah, well, no, that's going to be too much of a jump for me. So we have to set more realistic goals. And the only way you're able to do that is by looking at what you did in 2025. So that's really important. Projections and budgets really are driven by your actuals for the prior year. The third thing you want to make sure, this is another big one, preparing or confirming your tax forms, especially if you have employees or contractors. So if you have employees, you may have a payroll service provider, someone like Gusto or ADP, Paychex, something like that. Now, they will prepare the W-2 forms, they'll prepare the 941s and 940s, but as the business owner, you should also be going in there and making sure that the addresses of your employees are up to date. I've seen it happen so many times when you'll have employees, they've moved during the year, and now their W-2 wasn't mailed to them, or they can't find it. I mean, and yes, there's email, but we all know how our tax professional, not our tax professionals, but our hair professionals are. I've seen it, oh, such and such doesn't have an email, or she don't check her email, or he don't check his email. We all know the stories of the people that we work with, right? We know us. And so you want to make sure that these addresses are up to date so that they're getting their forms so that they can file their taxes. And then also, if you have independent contractors, I'm not even going to get into if they're misclassified or not. Let's just roll with the facts. If you had independent contractors, whether right or wrong, if you had them and you paid them over $600, then you are responsible for giving them what's called a 1099 NEC. And so, funny story with this one, I was working with a braid shop. I think I don't even want to say the location. I was working for a very popular braid shop, and this particular owner had about 15 braiders, independent contractors. These forms are due by January 31st. That's when they are supposed to be delivered to the contractors. And if you have employees, the W-2 is supposed to be delivered to them by January 31st. Or I'm sorry, submitted to the IRS and your employees or contractors by January 31st. This particular woman reached out to me in March. Okay. Now remember, taxes are due in April. Well, that's the deadline. But most people are filing way before April and or March. And so she was like, "Oh, Jennifer, I need help coming up with my 1099 NECs for my 15 braiders." And I was like, "Ma'am, it is March. You were supposed to have these forms submitted to them and the IRS by January 31st. So this is why this is so important. I do not want you missing out on, your deadline. So that's a really important deadline. Another thing that people don't realize with these 1099 NECs is that you have to make sure that you are paying, also giving these 1099 NECs to any of your independent contractors that you had come in to do certain things. Like if you had someone fix a sink, or if you had someone repair, some styling stations. If you paid them over $600 in cash, technically you are supposed to give them a 1099 NEC. So you want to make sure that you're just doing your due diligence with anyone that you pay via cash. And the whole idea behind that is that if you are, the IRS doesn't know about cash payments. And so if cash payments aren't reported to the IRS, this is a way for the IRS to know that, hey, somebody should be reporting income. So that's a business owner's responsibility. See, I spent a lot of time on that. All right. Confirm your tax structure. Now, I'm going to go into this more tomorrow. That's tomorrow's topic, but this is another big one. There's some confusion. Some people are confused if they are filing a business tax return or if they are filing a personal tax return when they have a business. And so, without going into too much detail, I just want to make it clear that your business structure doesn't always equal your tax structure. And so you want to make sure you know both. If you are a sole proprietor, then it's equal. Like if you're a sole proprietor on your business entity, then you're a sole proprietor for tax purposes. But as soon as you make your business, as soon as you register your business with the state as an LLC, then you open up the doors for how you are taxed. Now, if you've done nothing special with your LLC, then you are taxed as a sole proprietor. But if you've asked the IRS to tax you as an S Corp or a C Corp, then you have to file different tax forms. And like I say, I'm going to go into that more tomorrow, but it's really important in January, before the month ends, that you understand and confirm what your tax structure is. Let's see. And Tara, I love it. Tara is trying to get some action in the chat. Somebody else say what where they're from or answer any questions. Thank you, Tara. I appreciate it. All right. So the next one is make your estimated tax payment for Q4. So this is one that a lot of people forget about. Because we're in 2026, but the very last tax payment for 2025 is actually due by January 15th. And so you want to make sure in the month of January, before the 15th, that you're making this last estimated tax payment. Now, if you are someone that's going to owe more than $1,000 to the IRS, then you're required to make estimated tax payments. Now, if you're going to owe less than $1,000, you don't have to. But this is another big one for January. You want to make sure that you are making that very last estimated tax payment to avoid any penalties, because there will be penalties if you do not make this tax payment, and if you're required to. So let's see. I have 7 of these. I don't know if I mentioned that. So this is the 6th one. And I have stars next to this one because this one is, these last 2 are really for people who work with accounting firms. Now, I will tell you, if you are self-employed and you do not work with an accounting firm during the year, then you have a lot of the heavy lifting to do, unfortunately. Um, the 1 through 5, like these are all things for my accounting firm, like we're doing for our clients right now. We're in the month of January, so we're taking care of all of those things. But then when it comes to, well, the tax payments, we're reminding our clients, we're not making those payments for them, but we're reminding them of those tax payments. Um, so number 6 is making sure that you are reviewing owner draws and distributions. Now, this, for any of my clients that are watching this live or on the replay, you know who you are. I won't mention your names. But if you have not answered questions about deductions that we have asked about or transactions, swipes that are questionable, then you want to make sure you let us know what those are so we can categorize them properly. This is important because anytime you're working with an accounting firm or you have a bookkeeper, they are recording your transactions. And there will be times when you make a purchase that they don't recognize, that doesn't fit your normal routine. And if they don't have documentation from you on what that transaction is, the conservative thing to do may be, depending on what the transaction is, may be to code it as a distribution or an owner's draw. And so you want to prevent that from happening because anything that's coded to an owner's draw or a distribution is going to be taxed as income for you. So that's really important that you answer those questions that may be uncategorized during the year. And you can ask for, a list of all the transactions that have been coded to you personally so that you feel comfortable with whatever they're saying is your profit for the year is accurate. Number 7 is, again, for folks who are working with accounting firms, you want to make sure that your monthly fees include tax prep. So as an example, I want to say maybe 2 years ago at our firm, we didn't have tax fees included in monthly accounting, in the monthly accounting fee. But now all of our clients, it includes the taxes because everyone wanted tax services. So instead of having one fee during tax season that's separate from the regular fees, we just combined everything. But if you're working with a firm, you want to make sure you confirm early enough if your fee already includes tax preparation, and you want to make sure if it includes any audit protection. For our clients, audit protection is included because you're working with enrolled agents, you're working with CPAs, and so we back our work so that if anything comes up and the IRS questions anything, we're able to defend it in front of the IRS in all 50 states. So you want to make sure that you want to make sure what you're paying for is including taxes. If that's my recommendation. If it doesn't, then I would get on top of that right now because sometimes that can mess up your cash flow if you have to pay for taxes when you weren't expecting to. So let's see, checking my notes here. I'm checking, I'm not seeing any questions in the chat. I'm not seeing anything. So if you have any questions, I'm going to try to keep these very short because, again, the idea is that I will be going live for the next, I guess, 88 days now. The entire series is 90 days. And so keeping these short, but whenever possible, if you have questions, I want to make sure that I'm answering them. I'm right at 20 minutes. So I'm going to be wrapping it up. Tomorrow, we're going to be back here. The topic is going to be understanding business taxes versus personal taxes, making sure that I break that down, what pass-through entities are and how you're structured impacts your taxes and how you pay taxes and how the IRS sees you for tax purposes. Now, if you are in the hair industry or if you're a self-employed hair professional or you are a hair business owner and you want help with your taxes for 2025 or any prior years, you can click the link in the description on this video. There is a link that will send you to secure your spot for 2025. I'm working with a limited number of hair professionals and business owners this year. So you want to make sure you secure your spot early enough to be included in that. And yeah, I will see you tomorrow. And again, my name is Jen, and I help simplify profits and taxes for self-employed hair professionals and hair business owners. And I will see you tomorrow.